It's a sell-off today after the Dow hitting a new all-time high on Wednesday. Even as Washington, those Democrats, finally limped to the end of the longest government shutdown in U.S. history. Welcome to the Big Money Show. I'm Dagan McDowell, along with my co-host Taylor Riggs, Brian Brenberg, Jackie DeAngelis, and with us for this hour, Kaltbaum Capital Management President Gary Kaltbaum. President Trump declaring victory after weeks of gridlock that froze paychecks, halted information flowing out of the government, and cost the U.S. economy an estimated $11 billion.
The vast majority of congressional Democrats were happy for millions of Americans to suffer. They really did suffer, too. And the Democrats admitted. They said, well, no, we finally have a point. Even though people have to suffer, we finally have a point, and that didn't work out too well for them. But they really went out and they could appease the fringe benefits of their far-left base, but that didn't work out because now their far-left base is angrier than ever before.
The White House admitting that the fallout could be permanent. Think lost productivity, delayed spending, missing inflation. There's one unemployment rate number that we'll just maybe never get. And the jobs data has some traders, investors flying blind. Markets have managed to persevere. But for how long? That's a question mark, because Congress came to a deal, reopened, and now they're taking a victory lap. But in reality, they can't even find the starting line. This is a jump ball. But if you look, so the shutdown started October 1. That was the beginning of the quarter. If you look at all the major market gauges, Dow, S&P, NASDAQ, even the NASDAQ 100, the transports, the Russell 2000, and the utilities index, quarter to date, all up, all of them. If you look at the markets, there's really not any fallout.
So did they just not care, Gary? Is government just less important?
Markets throughout history haven't cared too much about government shutdowns because they always know they're going to open up, and they always know we're going to have massive spending and massive debt that goes into GDP going forward no matter what. But I will tell you that underneath the surface of the market is some serious weakness going on. When you have a select few names doing the job, it helps the indices, but I'm watching very carefully right here because bubbles are popping. As I said a few weeks ago to you, a bunch of no sales things are down already 50 to 70% in the last 6 weeks. And I'm pretty sure this whole AI trade, I'm not saying is a bubble, but I think there's going to be a little bit of a give back now, just because it's become so over-owned, over-leveraged, not necessarily overhyped, but things cannot grow to the sky. And I can tell you some stocks went vertical. And I think that'll be healthy when all's said and done.
Can I just push back and help me understand?
No.
The counter argument. You sound like my 2-year-old. Her answer is always no to everything I say, Gary. The pushback to that is AI is the fourth industrial revolution. This is a strategic, structural shift in the economy where AI will lead because AI is the future. This isn't, and I'm not saying that you called it like the dot-com bubble,
right,
but that's when there were literally no earnings. People were just IPOing for fun. Is that not the pushback? AI should be leading because we're undergoing a structural shift in this economy?
What I'm just saying right now, it's had a monstrous move already. And there's, I hate cliches, but the trees don't grow to the sky in the near term. And I think we started the give back on some of the good stuff in the last couple of days. I would not be surprised for in the teens, NASDAQ 100 pullback here, which, by the way, is supposed to happen once or twice a year. So I don't think it's a big biggie, but something to watch very closely because, again, 8 stocks, and they're all in that realm, are 38% of the S&P and almost 70 of the NASDAQ 100, and that concentration has to be worked off eventually.
And that's a little of the seesaw action that I think you see in this market. You see it go up, then you see some profit taking. I think the shutdown is over euphoria was yesterday. Everyone got excited about that, the spending that you're talking about, Gary. And now the market is kind of looking at this and saying, well, okay, the shutdown's over, but some real things did happen here, and the Democrats did cause some damage. Let's review. Number one, they did the favorite thing that they love to do, which is cause chaos, because they just enjoy that. I think it's fun for them. But this delay on data What's it going to mean for rates? You've got a Federal Reserve that now everybody says is flying blind. I don't necessarily believe they are flying blind, but they could use that as an excuse to not do what Trump wants them to do on rates. They got some crucial election wins last week by having the government shut down and sort of pressing on people in Virginia, for example. And they're going to get this drag on growth with the GDP that's probably going to be cut in half for this quarter. They will grab onto that like a dog with a bone and say, see, the economy is not what you thought it was. And they will spin it that way. And I think that's what is being contemplated today.
Yeah, the timing is interesting because they'll get excited about bad growth in the fourth quarter, but then a lot of that will go into the first quarter. And I don't know, does that help Republicans?
No, then they'll shut the government down again.
Bingo.
The focus will be there.
I totally
So nobody will be looking at the rebounding growth because the numbers will stop again.
Jackie, I totally agree with you. I'm watching all these Democrats react to the government coming open again, and they're all so mad about it. In the House, they're so mad. And I think I saw Senator Cory Booker for a second. And you know how, like, when his eyes get real big and he's kind of foaming at the mouth?
The veins bulge
He was
out of
doing
his
that because he's so mad at Chuck Schumer because Chuck Schumer failed them. So I agree. I think they really want to shut down the government again in January. But can I just say, there's sort of a silver lining in this whole thing. And I'm glad you mentioned the election results as well, because I think the shutdown and the election results did something for President Trump. It really got his attention. He had been so focused overseas, peace deals, all good things. But I think this, because the economy is his signature issue, affordability is his signature issue, he just got locked in. And I just expect him for some time now to focus almost exclusively on the economy and affordability, and I really think that's good. So I don't think the path's going to be easy because I do think they're going to want to shut it down again, but I think the president is now locked in on his signature issue. And you may not like some of the early ideas, 50-year mortgage. I don't even know that he liked that idea, to be honest with you. That's some of the reporting. But I think you're going to get better ideas on health care, on housing. And I think that's his bread and butter, and I'm glad that that's what's on his plate right now.
It's important, though, that the market be stable and keep moving up for the president's approval rating.
Yeah.
And my point, so what has fallen out of bed, Gary? Bitcoin. Bitcoin's down 11% during the shutdown. I would argue there's probably no correlation. But I did want to say one thing about AI. The kind of epicenter, the sun around which all of these other artificial intelligence companies revolves, not so much NVIDIA, it's really OpenAI in terms of the deals that are happening. OpenAI doesn't have any profit. It is has no profit, and its revenue is 2% roughly of Amazon's revenue. So there is and it's something I raised, I think it was earlier this week, that they're the five horsemen of the apocalypse: Apple, Meta, Microsoft, Amazon, Google, pouring just trillions of dollars into AI, and they've spent they've been spending out of their own cash flow, and now they're kind of bumping up against, now we have to set up these special purpose vehicles and use debt through Blue Owl, which is what Meta is doing with just one infrastructure deal in particular. However, are they creating businesses that are less profitable and less valuable than their current giant monopolies? Why hasn't any investor woken up to that fact?
Dagan,
And I'm talking about like Google as one example.
you just nailed something. So Oracle announces gargantuan numbers, and the stock has just buckled. Why? Debt. Simple as that. You mentioned OpenAI. They're talking about the spend going forward. They don't have the money for that. It's gone through debt. And if anything hurts ultimately is too much debt on anything or leverage. You mentioned the Bitcoin and crypto. You know what the problem is? MicroStrategy, that's now Strategy, continues to go into debt and issuing stock to buy more Bitcoin, and they're getting in trouble. Their stock's down 50 some odd %. So these little things, you never know when you get the unwind. So it's something I'm watching very, very closely. You know how you're going to know? Just watch the stocks, and it'll tell you everything. By the way, I just have to mention one thing. I don't want to hear from anybody ever again, from the media or for the Dems, that it's the Republicans' fault on this shutdown when they are whining and complaining now that we're opening back up. It is an amazing thing to watch, their utter stupidity. And, you know, I went independent a long time ago, so I have no love for anybody, and 38 trillion is the evidence. But they make it so easy for the Republican Party at this point in time, not just with their moves, but just some of their proposals are just outrageous. It's all about them and all about control, nothing about the people. And that's why usually you're supposed to win big in the midterms next November. I'm not so sure that's going to happen.